You are listening to Charting Wealth for Wednesday, the 13th of May, 2015. This is our market review. This is where the market ended up. This is our two-day chart on Tuesday when it closed. It closed actually a little higher for the day, but this is the two-day chart. What do we see? Well, we are in a downtrend. You can tell from the MACD crossing over going down on the two-day chart, the acceleration of the derivative oscillator. That's these red lines, these red triangles in the back. And we are currently in a downtrend. Now again, the caveat here is we are in the month of May. Sell in May and go away. Volume typically is leaving the market during the month of May. The big traders are going on vacation. The big money's leaving the market and things get choppy. But this is where we are right now. Now let's look at the 4-hour chart that'll give us an idea as to what's actually going on during the day. This is the morning candle. This is the afternoon candle. A lot of down movement, a little bit of up movement overall. Now you saw that two-day chart earlier. Two-day chart shows up movement. That's taking into account both yesterday and today. And of course, what do you see? Well, overall, IYY is down 0.28. And again, that's the total market. That is the overall market. So if we switch back out to the two-day chart, again, you can see the way it ended for the 2 days. What do we have, though, going on the SPY? That's the Standard & Poor's 500. We again see some up movement today. What we see overall, though, on SPY is a down movement on the daily chart. Again, this is the two-day chart. The daily chart is down 0.29%. And again, we're looking at a bigger chart. Why? Bigger charts, bigger money, bigger wave. If we revert back to the 4-hour chart, we'll get a little bit better idea as to what happened. We see a lot of down movement in the morning, a little bit of up movement in the afternoon. We can see that it ended on the 4-hour chart actually below the trend line, the two-day trend line that we drew. Not a great trend line just because of the way the market's been moving sideways and is a little choppy, but it gives us a feel. We can see now that the 4-hour chart crossed over going up back on the 8th of May around noon, and it looks like it is decelerating and getting ready to cross over going down. But like we told you, when we range out to the two-day chart, we are currently in a down move, crossing over going down. You can see back on the 8th on the SPY, the Standard & Poor's 500. Now, let's go ahead and range. We're already ranged out to 2 days. Let's look at the Qs. What is the NASDAQ 100 telling us? Well, same kind of thing. Now, this is a much better trend line. We've got 3 lines, 4 almost connected, different candles on the two-day chart. We have a crossover going down back between the 4th and the 6th. Derivative oscillators going down. We have nice standard down movement that we might expect. The Qs is a little bit more chartable than the IYY and the S&P 500. That is the total market and the S&P. Let's back up and look at the 4-hour chart. A lot of movement down in the morning, a little bit of recovery in the afternoon. Still, overall, the Qs is down 0.45%. So we have all 3 of our indices that we're looking at in down moves right now. A couple of them down on both the 4-hour, but the real thing that matters is the down movements in the two-day chart. That's why we use big charts for big money and big movements. Now, if we range back out, we're going to look at the one commodity that we always look at, and that is gold. Where is gold? Well, sort of in a doji is what we call that. Just as much up movement as down movement. No movement when the market ended up starting and closing over these last 2 days. You can tell, though, that gold is still technically, if we're looking at just the indicator right here, that is the MACD, gold is actually moving up. Now we can tell with our trend line that it is not. It is continuing to move down. Gold was up 0.85% today, but again, looking at the 2-day chart, you can't tell much there. It is trying, as far as the derivative oscillator, there is basically no derivative oscillator there. It had been in a negative position, so gold is trying its best to move up, but again, you can tell it's not even touched the 2-day trend line. It's not even as high as it was, well, how far? Well, as far back as we're going, I guess if we went all the way back to sometime in, let's see here, how far do we have to go back to find gold? Sometime in April the 2nd, gold has moved up to as high as it was back on April the 2nd. It's been higher than that most of the rest of the time. So again, what we see in gold is it is currently in a downtrend. We do have the MACD supporting it. We do have the derivative oscillator again trying to support an up move, but we'll have to see this 2-day trend line broken. Let's convert over to the 4-hour chart and see what we see there. Again, we see movement throughout the day trying to push up a little bit. Again, when we start seeing, we do see a crossover moving up on gold. It is pushing through, at least on the 4-hour chart, through the 2-day trend line. So again, we'll pay close attention to gold as to what it does over the next couple of days. It is nice to see gold pushing through the moving linear regression lines, both the 34 and the 30, and it crossed over going up, and the derivative oscillators trying to cross over going up. So again, let's keep an eye on gold and see what it does. Maybe the doldrums on gold are coming to an end. It's going to start making some sustained up moves. Let's keep an eye on it. So we know where our major indices are in down moves. Gold's trying to make an up move. Let's continue to watch the market, see where it goes on Wednesday. Hope this helps you get a feel for where things are. Again, continue to listen to the charts, not the noise. Pay attention every day. Do a little bit of studying. Please go to chartingwealth.com. Got a lot of good training there. Appreciate it if you would like us on Facebook, follow us on Twitter. We'll do everything we can to continue providing you with great educational information. God bless you. Good trading, great investing.